Joining me on stage now to help to discuss some of the issues that Mr. Ma has raised, as well as others, are 5 superb panellists. I'd like to call them all up on stage now, if possible, beginning with Mr. Mark Sebba. Mark is the CEO of Net-a-Porter, and an organisation you joined in 2003, Mark, to help take the business from startup phase in 2000 to, the expanding company that it is today. I'd like to also welcome Mr. Jason Goodman, who's Chief Executive of Albion London. Jason founded Albion in 2002 after a very successful stint at Tribal DDB. Mr. Alastair Lukies, who's co-founder and Chief Executive Officer at Monitise. You tell me that you began your career as a professional rugby player and managed to break 30 bones that time.
So click when I walk.
I'm very pleased that you stopped when you did, so you could become certainly one of Britain's leading enabling brands, if you like, behind e-commerce. Next, Mr. Justin Tang, who's co-founder and partner of Blue Ridge China. Mr. Tang co-founded Blue Ridge China in 2006 in partnership with Blue Ridge, the very large American VC company. You now have about $1 billion in investment in China, I gather. And also, before then, you founded Elong, a leading online travel service company in China. And finally, last but by very means not least, it's Wang Xiaoyong, the chairman of China Equity. Mr. Wang is a very well-known VC in China, who spent a decade in banking, mostly in the US and China. So between us, I think we have just about all the bases covered for a very successful e-commerce startup. So I think we should all just leave now and go and draw a business plan up and, and start off. But I'd like to, I guess, set the ball rolling by asking each of you in turn, in a way, to talk about what a successful global e-commerce company now looks like from each of your points of view. We've been in this business for a little while now. We've learned lessons when it comes to e-commerce. There are new things coming up. M-commerce, for example, we're beginning to talk about now, almost in as we've heard, in precedence to e-commerce. But if I could perhaps start with you at your end of the panel there, Mark, if you could maybe set the ball rolling for us with some blue sky on what makes a successful e-commerce venture now.
Thank you, Ian. I would say it's the customer. You have to look after the customer. And the customer has to come first. And everything that we do revolves around the customer, no matter which territory, which country she lives in. And in our particular end of the market, which is high-end fashion, we're fortunate because our customer, so far, and I say so far because we really haven't embarked upon the Middle Kingdom sufficiently yet to be able to say this, but so far, fashionable women around the world are interested in the same products. And we believe that fashionable women in China will also be interested in the same products. And therefore, we need to look after the customer. And I can follow this, I can pursue this theme at length, but I'll leave it there for the moment and we'll pick it up. Yes.
Maybe I can just build on what you've just said. There's some interesting new behaviours from a generation of sort of Gen Y, Gen Z, under 25-year-olds who are showing an appetite for new products and user experiences in e-commerce. A client of ours that we work very closely with in the UK who are expanding now internationally, Wonga, for example. You know, this is a generation where kids who are standing in a queue to go to a club on a Friday night are taking out a loan on their iPhone. In 15 minutes, it's being approved, the money is deposited directly in their bank accounts, and they can have immediacy, which they need and they want. They're looking for a level of flexibility and customer service now, which is unusual in traditional banking. And Wonga is a really good example of that.
So that sort of flexibility is sort of an essential element of a successful e-commerce venture.
It's a normal behaviour for them, which they now expect from m-commerce and e-commerce.
Now, from the enablement point of view, what are you looking for? I mean, if you were going to put your technology behind an e-commerce or an m-commerce venture, what makes it work for you?
Imagine that. Well, first of all, would like to thank Mr. Ma for his excellent talk and also for the advertisement that he gave my company by talking about Visa's innovation, because we build it for them. So we are an enabling company that connects up banks and mobile phone operators and retailers around the world. And I think we're seeing a very interesting new paradigm in M and e-commerce. And the reason for that is that we have a perfect storm brewing where industries are going to collide, and handset manufacturers, mobile phone operators, retailers and banks will all be in a fight to own a customer relationship for new transactions and new advertising revenue. And I agree wholeheartedly with what Mr. Ma said in his talk, which is when we talk about people's money, there's a lot more responsibility than distributing Crazy Frog ringtones. This is not an industry that you can play with. It needs to be taken very seriously. So I think we're about to see a new generation of enabling platforms, infrastructure businesses that you don't see as a consumer. They won't be B2C brands, but they will be companies that connect up and defend the role of the banks in their rightful place as the custodian of the consumer in commerce.
Thanks. Justin, you've seen this from two sides now. One is starting up an e-commerce venture in Elong, and now, of course, you're on the equity side. Have things changed, and have the criteria changing for setting up a successful venture? And in any case, what's your take on it?
Yeah, first of all, I think e-commerce in China is very different from the other markets in the world. So if you look at in China, I think that by far the most successful e-commerce company is Taobao. And the key for Taobao is to build a centralized e-commerce infrastructure. But in China, the existing infrastructure for e-commerce is highly fragile. And you could not rely upon a third-party existing infrastructure to provide your service. So in essence, Taobao basically built everything for itself, its own payment gateway, and it really helped to build the logistics system to fulfill efficient distribution. And also, I think it's very important that you need to have a highly efficient way to acquire traffic. You know, you have to be able to acquire traffic at a very low price. Otherwise, it's very hard to build a sustainable business. So I just leave with that.
Built-in robustness and proven ways to generate traffic are crucial. Really interesting. Mr. Wang, finally, from the equity point of view, and of course you've, as a seasoned investor in this space now, have you seen things change in the sorts of companies that you want to invest in, e-commerce and m-commerce companies in particular?
Well, similar to what Justin just said, I think there are 4 important ingredients to build a successful e-commerce company. First, a strong technology platform which provide low-cost transaction processing and high efficiency. Secondly, strong customer base, the ability to acquire and the influence and serve the customer, especially repeating customer base. Thirdly, the payment mechanism, and fourthly, the logistic system. In China, the e-commerce market grew tremendously in the past decade. There are many companies in China trying to copy the successful model of eBay, the C2C model, or the Amazon, the B2C model. There are many people or companies crowded in the same area, cutting throat price competition. So that's why we don't see a successful, too many successful e-commerce companies yet. But as a whole, the market of e-commerce in China surpassed 1 trillion renminbi this year, which counts about 5% of the entire retail market size in China, and growing at 30–40% a year.
30–40. Yeah. Which is pretty colossal growth, even at 5%. That's still an amazing market.
Fraction.
Yeah. One thing that's come out of the conversations now, of course, is that, I mean, I guess if we're talking about building an international business, there are obviously several considerations now about a European or US firm wanting to launch a mobile or a social media presence in China. What about the other way? I mean, do you feel that that Chinese companies are doing enough to look at the European or US markets and think, well, this is a piece of the action we ought to be taking?
Most of the internet companies in China are domestic-centric, China-centric, because the market customer base is big enough for anyone to build a big business. We have close to a billion customer base. Now, the mobile users are also approaching that number. So companies like Baidu.com, I mean, they don't need to think about going abroad. They, being the #1 in the Chinese language searching market, that's already good enough. Make the company $50 billion company. Only company we think about, they tried overseas expansion is Alibaba, the B2B section, which provide a global trading platform. But recently, I think they spend more focus on domestic market by streamline their Tmall, their Taobao, their software, their payment platform. I think at the moment, I don't see anybody going abroad for strong or rapid expansion yet.
Right, and is that likely to be the case for some time? Mr. Tang, do you have?
I think for most of the Chinese company, it will have a lot of challenge to expand its business overseas, because I think the internet company in China is actually very different from the internet company in the Silicon Valley. And the biggest advantage for internet company in China is really in the local execution and to how to market its product and services to local consumers. But very few of them actually have original product idea. So if you don't have original product idea, you don't have a unique product that be acceptable by net users, I think it's very hard to introduce your product overseas. Maybe there are a few game company, because the online game is very big in China, so there are a few game company, they may be able to replicate their business outside China. But I think for the foreseeable future, for local Chinese internet company to expand overseas, they will have a lot of challenges. Yeah.
I'm wondering if I could go back to you again, Mark. I mean, the implications there for a successful e-tailer, if you want, such as Net-a-Porter. I mean, what are the implications there for you in moving into building on your Chinese presence?
Well, there are many challenges, obviously, for us. The first and foremost challenge is understanding whether the Chinese consumer will take to fashion in the way that she and he has taken to luxury. The luxury brands have been very successful in China. What we are interested in doing is developing a fashion market. We're not interested in competing on price. We're interested in fashion and in style. And many of the designers whom we are interested in and whom we like and whom we choose, because the essence of our business is to create an edited or curated look, many of those designers will not necessarily be household names in China. So we have a double challenge from that respect. We're not trying to compete on price, and we're not trying to compete, and we're trying to introduce different concepts. Either everybody is very nice to us and says they'll sure we'll succeed, or else, well, they are very nice to us and they say they think we'll succeed, or else they're being untruthful and saying they think we'll succeed. But that is clearly our big challenge. We also have significant logistical challenges. We at the moment distribute only from 2 centers. We distribute to 150 countries in the world, but from either London or New Jersey. And we are building a distribution center in Hong Kong, which will be up and running by the beginning of next year. And so that will enable us to be within 24 hours reach of any metropolitan city in the world, which is our ambition. How the distribution channels within China will work is something which obviously we're looking at and working on and creating. But the point was raised at a meeting yesterday: how do we manage the security of our expensive products? And that is a challenge for us, which we'll need to manage.
Something I can pick up on, ask you about at this point, Al, the security angle, and whether or not there are issues that European or US companies ought to be thinking about as they, embark or grow their e-commerce presence in China that they may not be thinking about at home. It strikes me that obviously we have big security issues here that we have to obviously abide by as well. But are they a completely different set that you need to look at? Or?
Yeah, I think there's excuse me. I think there's a couple of points. I mean, one of the things here in everyone's views, I think that today's all about is there's a huge opportunity between the UK and China. The UK is trusted, I think, by many parts of the world as a good business partner. I think China is known for its innovation and scale. And I think the two countries can work very well together to distribute the best of both countries' capabilities. When you talk about security in the sense of payments rather than necessarily distribution and logistics, you have a real challenge with any new service that requires a consumer to pay if it's not 100% secure. Because consumers will happily use a new service, a new innovation, until such point as they lose money. And as soon as a consumer feels that there isn't trust with a service, whether it be in the mobile channel or the internet channel, they will move away from it very, very quickly. And I think one of the most fascinating stories of the last week, although it was not related to security, but it does prove the point, is that Facebook's share price was hit so hard by Zynga's poor performance, Zynga, which obviously powers a lot of the payments in their online gaming capability. So I think when we look at the next 10 years of innovation and growth in mobile commerce, where you see pockets of innovation that aren't backed by regulated, PCI-compliant, bank-grade environments, you will see consumers move away from them. I also think that payments, by its very nature, is an open business model. 10% of a big number is a lot better than 100% of nothing when it comes to payments. And in China, there's a very big infrastructure called China UnionPay, which is the bank-owned switch. Visa, the global payments company, has made strong attempts to grow its presence in China. And I think when you see collaboration between two organisations like that, it'll open up a new world of opportunity.
Thanks. Jason, you must have had similar sorts of thoughts with some of your companies you work with, such as eBay and Skype and so on.
Yeah, I think our experience with Skype, we worked with for 6 years, was a very interesting one. And we learned an awful lot, and I think probably one of the greatest learnings was the importance of partnership. The success of Skype in China was as a result of a really strong partnership with Tom, and accepting and acknowledging that the customer was best understood by Tom and not by Skype, and Skype was the technology behind, but certainly not was not owning the user experience. And we've had the reverse situation when we've been hired by someone like Hutchinson One Power when they wanted to introduce the Skype phone via 3 back into Europe, and recognised that the power of the Skype brand was actually more powerful than than Hutch basically in Europe. So I think there's partnership for me has always been one of the key kind of philosophies behind the internet. Few people can do anything on their own. So we find that we're either the broker for partners or actually have to bring the consumer insight into kind of how the best partnerships can be forged.
As investors, gentlemen, would you say this is a crucial part of any, should be a crucial part of any European company strategy, for example, as it goes into China as well? Would you be expecting them to team up with a local partner in order to be successful?
Well, we had a great pleasure visiting Mark's company yesterday afternoon. I think Net-a-Porter serves as a very good example for a European e-commerce company to expand in China with a special angle. I think a special angle and a special value Mark's company can bring to China as an advantage over local competitors in the same area is their product sourcing power, as well as their strong editing ability with new contents which lead and drive customers' shopping habit in the fashion and luxury sector. I think they have some good leadways in China in the future.
Justin.
One thing I want to say is, partnership obviously is essential. But, I'll be very frank. I think if you look at it from history, just the partnership itself is very far away from a recipe for success in China. And if you look at history's odds, it's very much against you. So because the fact is, over the last 10 years, literally 99% of the foreign internet company failed in China. I think that's a fact. No matter you're winning alone or you're winning with a partner, the end results, you fail. I think, if you look at most of the successful internet company in China is a local creative company and built and run by local entrepreneurs. So, again, I'm not saying, in the future it's not, it's not possible for global internet company to be, be successful in China. Actually, my previous company, Elon, actually is one of the exceptions. Actually, they did actually quite well. They're doing quite well. But I still think, the odds is very much against us until so far.
That's a very interesting point to pick up on. What's the reason for that? Is it a trust issue or this is one of those questions I've just asked, and you said if I had about 2 hours, I could answer it. But yeah, if you have a simple answer for that, it would be, I'm sure everyone would love to hear it.
One is the market. I think the market in China is so much different from the marketing anywhere else in the world. The level of competition and the level of competition, I think, is much more fierce than US and in Europe. The second, I would say, is the decision-making structure. When you have an internet company, when you have a centralized decision-making structure as well as IT structure, your business model just cannot be adopted into, China. Then the third thing is like in China, the traditional infrastructure is very much not ready compared to here. Here, you just focus on what do you do the best, and there's always other people who do other things for you. But in China, actually you have to do a lot of things yourself. And for the Western company, actually, they don't get used to, do that. Then I think the fourth is the sense of ownership. I think Chinese people, on the one hand, they work very hard. They are very entrepreneurial. But some, on the other hand, they are a little bit too smart. So when they feel they work for a Western company, I think the alignment interest is not necessarily 100% over there. So I think, there are other things, but I think these a few things will make your life difficult enough, I think.
Yeah. Also, I would like to add one more factor, which is the government control and regulation sets very high entry barrier for international internet company. Today, even China entered in WTO, a certain area like internet, ICP, or telecom value-added service, still restrict foreign ownership for not over 50%.
I'm going to just pause there very briefly. I will be opening the floor up to questions, and so please feel free to let the attendants around the room know that if you have a question. If you don't feel like standing up and talking out loud, you can write it down on one of the cards on your chair. But in any case, we'd like to make this an interactive session as we go on. So, but meanwhile, yes, I'd like to go back to the discussion here because it's fascinating. Yeah, Al.
I think I agree. Excuse me. I agree wholeheartedly with the points here. When we looked at China as a potential marketplace, we found research that validated exactly Justin's point. And so the ownership thing for us was back to a payments cliche of a small percentage of a big number is a lot better than 100% of nothing. We formed a joint venture in Hong Kong with Victor Chu, a firm called First Eastern, which is an investment house that has a fund specifically designed to help UK and Chinese businesses work together. And we looked very closely at the Asian market and said, to grow organically from the UK or the US straight into China is an absolute no-no. What we need to do is create a showcase within a nearby territory. So we formed a partnership with Jetco, which is the ATM switch in Hong Kong. Jetco is owned, as Mr. Ma will know, by many of the Chinese banks. So it gave us an opportunity in a more westernized market to demonstrate our capability. And then on the back of that, we've actually just launched in Indonesia and intend to look into China next year. But setting the expectations of our shareholders when looking at China was very important, and we said that it's going to be a minimum of 5 to 10 years for us to invest capital to even contemplate getting a foothold in China. And that's very important in terms of expectation setting.
Do you think, I mean, we heard a little from Mr. Ma earlier about the fact that there's a big generational shift which is now occurring among consumers. I'd like to ask about the impact that that's going to have about the sort of paradigm we've been discussing, about that sort of sense of ownership and so on. Do you think that's as pronounced in Generation Y or Z or whoever comes after Z, AA? Is it going to change things much as the younger generation grows up?
I think the change will be more profound than what's happening over here. I think, but one thing is, in China again, you look at it, it's the existing consumer infrastructure is very much not as ready as it over here. So I think the rapid development of internet and mobile internet will totally change that. So if you look at a younger generation, their behavior today is very different from the current generation of consumers, where they look up information, where they acquire knowledge, where they purchase their product and service, where they socialize with their friends, is totally from this generation of the consumers. And in China, for a lot of consumer products right now, the market still is highly fragmented. I mean, for example, we can use the fashion. The biggest casual wear company in China today is doing about $1.3 billion in sales all over China. That's actually not that big. But you really, with the rapid development of internet, you really create a room for a new brand, use internet and mobile e-commerce as new distribution channel to actually reach critical mass within very short period. Maybe we'll be able to do 500 million, 1 billion within next 3 or 4 years. So I think the potential impact, I think it will be very, very profound. What we're going to see is over the next 5 to 2 years, I think a bunch of new brand and new business totally created from the internet will shift, totally change the existing our consumer product industry. I think, yeah.
Mark, have you noticed that? Is your company looking for a different sort of demographic in China than what it's used to going to in Europe?
Well, yes. But I'm going to go back to my original theme, which is to look for the customer. What does the customer want to do? The customer wanted to go on the internet, but why? You could say, why should she have to go to the store, which is closed at various times that might be convenient for her? So she shopped from her desk or from her home. But now if she wants to shop on the move, she can shop on the move. And it's our job to facilitate her to be able to shop and inform herself or himself, in the case of Mr. Porter, wherever she is and whatever she's doing, and through what medium she chooses to do. And so it ceases to become a generational thing, and it's more just a question of where are our customers and what do the different ones want to do. And as long as we've got a large number who continue to want to use a desk-based PC, we'll supply that. We started our first app for the iPhone was in 2009, so we recognized very early on that there was going to be a demand for mobile. We found that until we created mobile-enabled sites so that we could detect if you were browsing on a mobile, that you were on a mobile, and therefore we served you up a different website. So this is not an app, it's a different website. we found that our conversion increased dramatically that way. So if my 19-year-old daughter wants to use her mobile phone to buy, and I won't disclose the age of my wife, but if she wants to go on using her laptop, they should both be able to use whatever they want. And we need to follow the consumer, and we need to follow the technology so that we're always providing, always serving our product in the way which our consumers want it.
A large part of the success, inherent in the success of any kind of venture along those lines is, of course, being able to capture and manage data for your customers. Do you find, are there challenges to doing that in China, or do you find that it's just reasonably similar to conducting a business in?
Well, at the moment, our Chinese business is very small, and we're capturing the data that we want, just as we do for customers in the US and anywhere else.
Sorry, did you want to? Oh, Jason, sorry, did you want to?
It's interesting to hear you say that about it may not be a generational thing. Our experience is that there is a kind of a significant generational kind of revolution that's going to take place. So,
Oh, I'm not arguing that the younger people will prefer mobiles and older people. I'm not arguing.
My 4-year-old goes up to the TV and tries to gesture to kind of get the channel to change. And I think there is a generation coming through whose used expectations of product is quite dramatically different to probably our own in this room. Our success with creating the giffgaff brand for Telefonica, for example, is based around kind of a whole generation's desire to be far more involved with the businesses that they actually purchase from. And also their desire to stay inside Facebook as well and transact inside Facebook is just much greater than kind of like the over 25s. So kind of, I think there are some quite dramatic.
Of course there are, and I'm not arguing that point at all. What I'm saying is it's not for us to decide we're going to serve you in this way or that way. We need to make sure that we're serving all our customers in whichever way they want.
Yeah, absolutely. I mean, one of the other channels which is coming along now, which is, I guess, greatly revolutionising the way e-commerce or m-commerce are conducted in over here is various kinds of social media, social networks. And I'm wondering if I can get a perspective from China about how social networks, the impact they're having on commerce in general in China, not just electronic commerce, but commerce in general.
In China, in the past 2 years, various venture capital funds put about $5 billion into 200 companies, which include platform company, vertical company, O2O company, logistic company, payment companies. So in each of those niche markets, you find quite a number of companies competing against each other. So the successful rate is hard to see. So now people think about how do they add value to their e-commerce business model, not only just simply move offline business to online business. They are thinking about value-added service. They are thinking about utilization of social network. So they can also build LBS and other mobile technology into it, trying to be differentiate from each other. So, of course, e-commerce plus social network plus local location service plus cloud computing. Yeah. All kinds of concepts are working around in China now.
What's that done to the consumer in China? I mean, so it gives them obviously a lot more power over the retailer, I suppose. To shop around and find better discounts. What sort of impact has that had on the quality of services offered by?
Sure. I think the social network completely break down the barrier for the exchange of information and the spread of the information among the consumer at a zero-cost basis. So this really have a huge impact on any, consumer product and services companies. Literally, you exposed any company in front of China's consumer at a zero cost and almost at instantly. So, as you might know, many Chinese companies, they actually have a lot of problem with, product safety, with quality. Historically, maybe you will get a couple write-ups from, newspaper, then you'll be able to cover it up very quickly. But now, first of all, is information very efficiently spread out over the, like Sina, Weibo, and other social networks. And then there are people even organized around the social network to launch, voluntarily to launch a campaign against your product. And we already see a few examples of that, yeah. So this type of impact, I think, a lot of traditional companies, feel that. If, for example, recently there's a major pharmaceutical company, just because of one of the, if you look at it, the traditional China perspective is a small issue, and the company almost get destroyed. I think without a social network, this type of thing will never happen, yeah.
So today, if something goes wrong, it can go wrong very quickly, in a very bad way, and with a very much more dramatic impact. So, what's that done to companies within China, to businesses and brands? How have they attempted to shore up their brands, if you like? Is there more attempt now to sort of demonstrate trust or show how things work, or to avoid these things happening again?
No, I think that what you can see is you will see some companies just not going to act fast enough to adapt that. And these are the people, like, over the next 5 to 10 years, I think that they will get marginalized. But there will be companies, they be able to create a business model, based on internet and mobile internet to serve the next generation of consumers. And these are the emerging brands we're going to see. And they will be much, much bigger than they are today. Yeah.
Do I have any questions from the floor before I go on? Yes, I do. Number 1, yes.
Good afternoon, everybody. I'm Steve Tappin, the CEO of Xinfu. I found it a fascinating panel this afternoon, and my sense is that the 3 UK Western leaders who have got very successful businesses in the West seem very confident about their success in China, and also feel that China is very important to their business in the future. But they seem to me to have limited experience of working in mainland China. And my question is for the Chinese CEOs, Justin and Mr. Wang, if they can give them some advice to come up the learning curve and be successful over the next few years. Xie.
Please.
He's asking if you can give advice to Western firms as they attempt to climb the very slippery ladder into China.
Well, as Justin mentioned, in the past decade, there are very limited number of successful internet companies in China. Most homegrown internet companies in China become leaders in portal, in searching, in e-commerce, in community social network. We don't see Google in China. We don't see Facebook in China. So that tells the chance of success of being successful in China is quite low. But how to make yourself successful in China, especially our 3 friends here, I think I understand Mark's business a little bit better because I visited their company. I think in the niche market for the fashion and luxury brand, the e-commerce company based here with advantage of source and product can be successful in China. But that's only in the niche market. But for the online payment business, I think as a technology provider, you may have a chance to work with China Mobile or Unicom. But if you want to get part of operation revenue or profit, it will be very difficult because the ICP and the financial payment license will be very difficult to obtain.
Justin, would you like to add to that?
I think first, I think is you have to make your China expansion decision very carefully. I think because if you make that decision to expand into China, that's a very big commitment. So I think don't just get attracted by the large market potential over there. You need to make that decision very diligently and carefully. But if you do make the decision to go in, I think you need to have long-term commitment. I think you should be humble and open-minded. That's very, very important. And you should be ready to pay the price and learn the lesson, because that's very natural. Don't get surprised. You end up having to pay the price and learn the lesson. And I think at the end of the day, I think it's no different from any business in anywhere. Basically, to find the best people you can get. I think that's probably the only, guarantee to success. Find the best people you could get, align their interest with you together. That's only that become possible, I think. Yeah.
Easy. Any comments from our three European CEOs here?
Obviously, we wholeheartedly agree. As I said earlier, we looked at China with a very long-term horizon and haven't put anything in any of our forecasts, our public forecasts, for quick success. Although, I will give a sort of parallel analogy. We looked at the Indian market, which is a huge market for mobile commerce. Particularly, it's what we call the perfect hybrid market, where you have 250 million banked consumers, but then 600 million other consumers that have a mobile phone but not a bank account. So the opportunity there is to take cash out of the economy with regulatory frameworks in place from the Reserve Bank of India and make a positive contribution to GDP and trackability of capital. And the Reserve Bank of India, which we applauded 3 years ago, issued some regulatory guidelines that said any mobile money service must be first and foremost driven by banks. Secondly, must be interoperable, must be open to anyone, no matter what their device or what their mobile phone relationship was, and that they would welcome companies from all around the world to bring their various technologies in, as long as they were proven to be working in that interoperable way. And so we entered the Indian market 3 years ago. It took 2.5 years to get the license we needed and to get the first banks to sign up to the service. But as you say, with a very big marketplace, you only need to get 1 or 2% penetration for it to be a very successful business, and we're seeing that now in India. So, look, I think we're very realistic about the chances of success or failure in China. We're fortunate in that we have Standard Chartered Bank as a shareholder in our business, and they have a good base in China, a growing base in China. But as I keep saying to the team, 1% of a very big number is a lot better than 100% of nothing. So.
We'll come back to the regulatory side, I hope, before the end of this conversation, but I do have another question over here. So
good afternoon. Hello, good afternoon. So my name's Ken. So just now the gentleman mentioned we got already 5% of the e-commerce of total retail scale. So I mean, as the very rapid development of e-commerce, in near future, the number should goes up to 50%. So what consequence supposed to be? I mean, for example, is it creating some side effect consequences? For example, unemployment, or something like that. So please.
Well, if e-commerce or online shopping counts for 50% of the total retail of China, that will change demographic of many retail industries players. I think you may see employment lost from shop clerks to be filled up by the job opportunities in the logistic and packaging and service and delivery companies. And also people work in the warehouse. I think there may put some pressure on commercial properties, but as a whole, I think the China retail market will grow in size, so that may not create a big vacancies for properties either.
It's just very interesting to me that I've heard a lot over the last couple of days about the offline to online world, and it's just interesting to me there's little talk about the reverse, this boomerang trend that people are talking about. Why Google, for example, is investing huge sums of money in its mobile wallet for purchases in the offline world, in the physical world. I think we're seeing dual trends here. I know that e-commerce is growing, but also because of the good point that you made earlier about location-based services and the fact that the mobile device is with you at all times and you can choose personal preferences and then make purchases in a store using near-field communications. I actually think we're going to see an interesting pushback to retailers in the physical world that promote their products in a way that make them much more purchasable with special offers. So I don't think we're seeing for 1 second the end of retail in the physical world. I just think it will be different.
And in any case, I guess the progression is reasonably slow. I mean, what percentage of total retail commerce are we up to here in online? It's not... It's
20, 20, is it 15?
Is it 15?
I think you think it's a bit high. I think it's about 15. Yeah.
So it's obviously incremental and
1.5.
Yeah. But any other comments on either of those?
Well, the only other comment I'd make about pendulums, because pendulums swing, but they swing back, and we're seeing it in the publishing side of our business. We have always considered ourselves to be as much of a retailer as a media company. We are providing content, and from the very earliest days, our business plan was to combine content with commerce. You can see your magazine online. We have many editors writing about fashion, about style, and we're read, or we have a mailing list. We email around 4 million people a week with new ideas about what's going on in the fashion, or in Mr. Porter, slightly fewer with Mr. Porter for men's style. And we've found and are finding that in the fashion industry, the printed magazine still holds sway. And even though people say things are going digital and the printed material is dead, that isn't the case at all. And we have always had a certain amount of printed material, and we are embarking upon a very significant publishing program, but publishing internationally, but using the same material, which will be repurposed for different markets around the world. And so don't write off physical retail because the trends swing both ways.
Thanks very much, Mark. Any more questions from the floor before we move on? I'd like to bring up a point that we've... Oh, yes, sorry, yes, madam.
Hi, I'm Amber and I work for LuxUp, which is a new internet-based business which is about to launch here in the UK. And I'm delighted to hear what both of you just said, because our business combines exactly those two things. It's fantastic content, we hope, online, and it is O2O, so it's online to offline. We want to drive people back in store, and that's what the brands want too. Yeah.
Thank you very much. I do want to go back to the regulatory angle, and it's one point that I think you raised, Justin, initially, about one of the hurdles that a US or a European company might face in going into China. How important is it to develop a close relationship with regulators, or at least have a good familiarity with regulations on the ground in China before you go in? And how much do you need to keep on top of that as you go on?
It definitely is very important. I think regulator cannot help you to achieve success, but regulator can make you fail very easily. So you need to maintain an acceptable relationship with them.
But it's more important in China than anywhere else, or is it as is, you know, it's.
Of course. It's over here, you know, still most of regulators still is relatively invisible. But in China, you know, regulators show up, you know, all the time. So it's. But on the other hand, actually, to deal with regulator is not as complicated as a lot of Westerner think. You know, unless you're in some of the very sensitive area, like to run an e-commerce company. Actually, you know, as long as you follow the basic rule and have the basic infrastructure, government will leave you alone, basically. Yeah.
That's right. In e-commerce, you don't need to deal with the censorship, like a portal or search engine content companies. But once you cross the line to financial services, then you met another sheer size of resistance from financial regulators. So in the future, you need to find local partners like Yinlian or China Mobile to help you to obtain necessary license. And big SOE, like for instance, the 4 telecom operators in China, they could be your partner, but they could be also your enemy. So you have to choose the right way to work with them.
Just on the regulatory point, I think you're absolutely right. It is different in China. It's something we studied very carefully. Obviously, in a lot of markets, consumers vote with their fingers and thumbs for a lot of things, including their democratically elected ministers and prime ministers. So the impact that consumers can have on regulation is increasing all the time. The ability, we've seen this with Obama's campaign, we've seen it a lot here in the UK, that if governments regulate or restrict consumers getting access to what they want, consumers will make a noise about it. So I do think that's different in China, and I think the advice here is excellent. What you need to do, if you're a tugboat-sized company, as we are, is you need to get next to an aircraft carrier, and you need to make sure that they feel that your proposition is their idea. I think your point about humility is critical. If you go to the regulators yourself as a Western company in China and say, we want to work in this environment, you've got a whole generation wait, I think, to have any hope. I think if you can persuade a Chinese partner to deal with the regulator for you and you provide one small component part of the ecosystem, then you have a chance.
I think one of the other points that often comes up in this sort of discussion is about protecting intellectual property. But we've heard it a couple of times, at least in passing today, the fact that steps are being taken to make sure that this is, you know, almost guaranteed as time goes on. But can you talk about that as a panel, about how, you know, has attitude towards IP changed in China over the last few years? Is it getting better for European companies, say, to move in and you know, make sure that their assets are going to not be copied and used elsewhere?
It's definitely getting better, and you know, actually, obviously, government did some things to make it better, but on the other hand, I think the market system itself, I think, work it out. You know, if you, for example, use you know, online video is a good example. You know, before, China is notoriously people look at all kind of online video, you know, for free. But if you look on the other side, over the last 3 years, the price of local online content increased dramatically. You know, the local TV drama series, the price 3 years ago sell for 5,000 RMB per episode. And then last year, the peak went up to 1 million per episode. But that actually gives you, you know, a perspective of how dramatic the competition. In China, everything, if either does not happen, but if it happen very fast and happen to an extreme. So, you know, either you got it for free, or if everybody pay for it, it become like 1 million. So we still have a lot of area to catch up, but I think you know, the market system work itself is getting much better these days. Yeah.
On IP protection globally, I think anyone that saw that movie, The Facebook, and the brothers, the rowers who were after Zuckerberg for years because he'd nicked their idea, even in the very short period since that story began, the world moves so fast in the digital world. If you really think that you're going to contain an idea and protect it through patents and intellectual property, I think you're setting yourself up for a fall. And I just think that
irrespective of any market you operate in.
it doesn't matter where you are in the world. I think if you've got a great idea, you've got to open it, you've got to distribute it, and you've got to just beat the competition.
Yeah, there's some fantastic examples of IP being copied aggressively in the West. So the kind of the myth that somehow there's a bigger problem in some parts of the world than others is kind of it's just garbage now.
Well, some of the regulators work faster in some countries than in others to deal with ISPs. I mean, generally, internet service providers in Europe and in the United States will move quite quickly to take down an infringement, particularly a blatant infringement. And it is much harder in China to police that. I mean, the laws exist there, and it can happen, but the standards of registration and information and moving to enforce infringement still, I would say, from our experience, because we do get copied very, very often, it's harder to enforce it in China than in other parts of the world. Which is not to say that the law doesn't exist there and the rights don't exist. It's just harder to enforce it.
I'm very sad to say I'm going to have to wrap up this conversation. We're going to take a short 5-minute break, ladies and gentlemen, before we move on to the final part of our afternoon's proceedings. I feel alternately challenged and encouraged at the opportunities I'm hearing here in the e-commerce and m-commerce space in China. I think what we've talked about today demonstrates an enormous amount of scope. As you said, things can happen very, very quickly and very, very dramatically in China, as they have had here, of course. And I love the sharing of ideas we've had on the panel this morning. I do think that between the 5 of us, or 6 of us, we could quite easily come up with a nice start-up at some stage if we had another hour this afternoon. But in the meantime, I'd like you all to put your hands together for our fantastic panelists this afternoon. Thank you very much.